To start, can you share a bit about who you are, how this firm came to be? Our firm, CMH Advisors, was started in 2014. Myself, along with my wife, Michelle, who's also a CPA, had this vision that we, can do things probably a little bit more modern, a little bit more relevant for our clients that have been experiencing for decades this old school way of doing tax and accounting, right? Hand off your documents, everything's in paper. Both of us started our careers at big firms. I was Arthur Andersen. She was also Arthur Andersen, PwC. And we just feel that over time, the industry has advanced to where we can be able to provide these services to clients in a more modern, innovative way. And we just both have that passion that clients deserve better. Those in the industry that work for us and have come to us deserve better. And we want a firm that delivers results that are for happy clients and happy team members. Tell us about your team at CMH. CMH Advisors was started in 2014 by my wife Michelle and I. We've now grown to 33 individuals between our Dallas and Wisconsin offices. Our firm focuses on high-level tax planning for business owners and high net worth families, but also accounting, bookkeeping, bill pay, payroll. We have a separate payroll company, Payroll Express. And also we have a wealth management affiliated firm, CMH Wealth Management, where we can help small business owners and families from how to start on tax planning to saving on taxes to taking it to the next level of how do I use these savings and benefits now to help me have a more fruitful retirement and pass a legacy on to my family or charity. When a major tax law like the One Big Beautiful Bill Act passes, what's your mindset as an advisor? We've started growing accustomed to Congress and the IRS changing the rules frequently now, whereas in the past these rules didn't change as much. But over the last 10 years, tax policy has become a tool that Congress uses on both sides to enact change. And so when a new bill comes in or is introduced, we like to gather the information and understand what it entails, but at the same time, we don't jump to a conclusion before the bill is passed. In this case, the One Big Beautiful Bill was talked about for years. We knew that most of the current tax laws were expiring at the end of 2025, and we wanted to be at least able to answer the questions as the bill was progressing through the House and the Senate. However, until it's passed, it's all speculation. And so we don't try to get too far ahead of it where we're making drastic changes for clients based on what we think it would be, but we're taking the time so that when it is passed, we're ready to tackle that. Our firm puts out documentation and clarity on these rules as they come about. We distribute them to our clients, our team, and our sources of influence around the country and even around the state that we work in. At a high level, what is the One Big Beautiful Bill Act and why are individual taxpayers needing to pay attention to it? There are a few things that come into play. One of them was for those who have estates individually that are higher than 15 million or combined married over 30 million. The estate tax exemptions, lifetime exclusions have increased to those numbers, whereas if they would have expired at the end of 2025, we would have seen a shift back to much lower rates, which would have required us to do some heavy-duty planning for some of these clients. Now with the higher rates, there's still some things they can take advantage of, but it won't have as big of an impact as it would have been had the law not been passed. On the individual side, for those who receive overtime, tips, some certain rules around bonus depreciation for real estate owners, there are some nuances that are very important. We've already had conversations with our clients in 2025 to make sure anything that needed to be taken advantage of could be, but also as we're going forward, we're working with our tax software just to make sure we can report these things properly so that our clients are able to take advantage of it. A big planning consideration that individuals should be thinking about right now. One of the biggest planning opportunities are for real estate owners. The bonus depreciation rules that apply to them, whether they own large real estate buildings or have a lot of rental properties. There are some nuances with the cost segregation studies that can be completed now that will help them accelerate depreciation. Small business owners, for anything purchased after January 20th of 2026, 100% bonus depreciation applies where it was 40% previously. We feel that there's some opportunities that clients are going to want to take advantage of from a planning time frame. One misconception, though, is taxpayers we find all the time, business owners especially, they go out and buy assets so they can get a tax deduction. We're big believers in don't spend $1 just to save 30 cents in tax. I think that stays and that is still relevant today. Don't go buy a truck if you don't need one. If you're thinking about spending the money, though, in the next couple months, yes, definitely it's time to take advantage of some of the new rules, and we're here to help however we can. Why is it risky to wait until tax season to address changes like this? A lot of these rules that are put in place affected 2025. At this point in January of 2026, it's too late to go back and do that unless you have some some things in place like a Roth IRA contribution, traditional IRA contribution, distributions from trusts. Those are things that can be done after the fact, and we can still help take advantage of those before March and April. However, if there was something that needed to be done in 2025 related to setting up retirement plans, those, after the 12/31 deadline, you're not able to take advantage of those, so you're going to have to wait another year before the tax effect would really benefit you. We find out that being able to do proactive tax planning before year end is very helpful. So for those seeing this and thinking, when do I need to hire an advisor? I always say as soon as possible. The more time we have, the more time we can plan and adjust before a deadline hits. If someone's watching this and isn't sure whether the One Big Beautiful Bill affects them, what's the best next step? The best next step in anything is always, make the call now. Reach out to a tax professional, reach out to somebody that can help you with this situation instead of waiting until it's too late. For many tax professionals right now, the tax forms don't come out until later. Even though the IRS is accepting tax returns for individuals starting in late January, many of the forms that they would need to file aren't even applicable or ready for them to be filed at this point. So waiting until it's too late could result in a tax professional not being available to help you until after April 15th. So now is always the answer, whether we're in January, March, July, or December. It's always best to start when you know you have an issue or when you know you have questions versus waiting until it's too late and the demand is too high for a tax professional.